Welcome back, everyone, to the Deep Dive. Today, we're going to be diving into a really interesting AI growth stock for 2025. The Motley Fool seems to think it's got some serious potential. And the cool thing is, it's going up against some of the biggest names in tech, but in kind of a clever way.
Yeah, that's right. The company is DigitalOcean, and their strategy is all about serving a market that the big cloud providers like your Amazons and Googles have kind of overlooked. The small to mid-sized businesses.
Oh, so they're not trying to go head-to-head with those giants. I like that. It's like they saw this opening and thought, hey, there's a ton of companies out there that need help, but not on a mega corporation scale.
Exactly. And the Motley Fool article we're looking at, it was published just yesterday, November 12th, 2024, by Anthony DiPizio. And he points out that DigitalOcean is already serving almost 500,000 customers. And get this, their average spend is just $15 a month.
Wow. That's less than I pay for my streaming service. But it makes you wonder, if their prices are that low, can they really be offering serious AI solutions?
That's where it gets interesting. They're not just offering basic cloud storage. DigitalOcean has a very deliberate AI strategy. I mean, remember, their AI revenue grew something like 200% year over year in the third quarter of 2024.
Yeah, I saw that. That definitely caught my eye. So what are they actually doing with AI that's working so well?
Well, key move was their acquisition of Paperspace. Paperspace runs data centers that are specifically designed for AI. So that gave DigitalOcean the infrastructure to really step up their game. But the real key is how they're making AI accessible to smaller companies. It's this idea of fractional GPU capacity.
Okay, I gotta admit, that's a new one for me. Break that down for me. What does fractional GPU capacity even mean?
Okay, so think of it like this. GPUs. Those are the powerful processors that handle AI tasks. Usually, if you want to use them in the cloud, you have to rent a whole server's worth of power, even if you only need a small amount. What DigitalOcean does is let companies rent just a fraction of that GPU power, so it's way more affordable for smaller projects.
So it's like buying a slice of pizza instead of the whole pie. You get exactly what you need without all the waste and extra cost. That's actually pretty smart. It makes AI a possibility for companies that might have thought it was totally out of reach before. But does that mean that the big cloud companies are just ignoring this whole segment of the market?
That's the thing. It doesn't really make sense for them to compete at that scale. They're geared towards those huge resource-intensive AI projects. DigitalOcean has carved out this niche that works for them, and it's working really well.
Okay, so we've got a company that's strategically positioned in a growing market. They're offering something unique, and their revenue growth is through the roof. But let's talk about the stock itself. What's the financial picture look like?
Well, the article mentions the PE ratio. That's the price-to-earnings ratio. And for DigitalOcean, it's currently at 44.2. Now, to give you some context, that's higher than the average for the NASDAQ 100, which means that investors are willing to pay a premium for this stock.
So it's not exactly a bargain basement buy right now, but there must be a reason investors are so bullish on it.
Yeah, and that reason is the incredible growth in their earnings per share, or EPS. We're talking a mind-blowing 1,650% increase in the first 9 months of 2024 alone. That kind of explosive growth can really get investors excited, even if the initial price seems high.
So even though the price seems kind of steep compared to other tech stocks, that huge EPS growth kind of makes it a little more understandable, like why investors are jumping on board. But I'm always wary of just looking at one number. Are there other metrics that kind of give us a fuller picture?
Absolutely. The article also mentions the price-to-sales ratio, or PS ratio. And that basically tells you how much investors are willing to pay for each dollar of the company's revenue. Right now, DigitalOcean's PS ratio is sitting at 4.8.
Okay. And how does that compare to like their historical average or other tech companies?
What's actually pretty interesting, that 4.8 is near the lowest it's been since DigitalOcean went public back in 2021. And it's significantly lower than their average PS ratio, which has historically been around 8.5.
So based on that, it sounds like the stock could actually be undervalued right now, even with that high PE ratio. It's almost like the market hasn't fully caught up to their recent growth. This is starting to sound pretty compelling.
It's definitely something to consider. And remember, the article highlights that DigitalOcean is tapping into this massive market. We're talking about a $114 billion market for cloud services for SMBs, and that's projected to nearly double to $213 billion by 2027.
Wow, those are some serious numbers. And if you factor in all the hype around AI and how it's going to revolutionize everything, wouldn't that boost those market projections even higher? I mean, if AI is really going to add trillions to the global economy, like some people are saying, surely a big chunk of that will involve cloud computing, right?
You're thinking along the right lines. It's certainly possible that the growth of AI will fuel an even greater demand for cloud services,
Yeah.
especially among SMBs who are looking to leverage this technology. And that's where DigitalOcean's strategic focus could really give them an edge.
Okay, so let me see if I'm getting this straight. DigitalOcean has this laser focus on making AI accessible and affordable for smaller companies who are going to be increasingly reliant on these technologies as AI becomes more and more integrated into, well, everything. And they're doing this in a market that's already huge and about to get even bigger. Sounds like they're in a pretty good position.
Exactly. They're not trying to be everything to everyone. They've found their niche and they're excelling at it.
Now, I know we can't just get swept up in all the positive hype. Every investment has its risks. What are some of the things that could potentially derail DigitalOcean's success?
Well, one thing to consider is the competitive landscape. Even though the big cloud companies aren't focusing on this segment of the market right now, they could easily shift their strategy if they see DigitalOcean as a threat. They have the resources and the infrastructure to potentially undercut DigitalOcean on price or offer similar features.
Yeah, that's always a risk when you're the smaller player. It's like being the first one to discover a gold mine. Sooner or later, everyone else is going to show up and want a piece of the action.
Another challenge for DigitalOcean is keeping pace with the incredible speed of innovation in AI. This is a field that's evolving at a breakneck pace. They need to make sure their infrastructure and their services are constantly evolving and improving to stay ahead of the curve and meet the ever-changing needs of their customers.
So it's not enough to just have a good product today. They have to constantly be thinking about what's next, what's coming down the pipeline, and how they can stay ahead of the game.
Exactly. And they need to do all of this while maintaining their focus on profitability, that incredible EPS growth we talked about earlier. Well, sustaining that level of growth over the long term is going to be crucial to justifying their current valuation and attracting even more investors.
Makes sense. Investors love a good growth story, but they also want to see that the company can turn that growth into real profits.
Right. Now, shifting gears for a moment, let's go back to that point you made earlier about the potential of AI to add trillions to the global economy.
Yeah, I'm really curious about the implications of that, not just for companies like DigitalOcean, but for businesses in general. What are your thoughts on that?
I think it's important to remember that AI isn't just about replacing jobs. It's about augmenting human capabilities and creating new possibilities. Think about it. AI can help businesses automate tasks, analyze data, personalize customer experiences, even develop new products and services.
So it's not just about robots taking over the world. It's about finding ways to use this technology to make businesses more efficient, more innovative, and more competitive.
Exactly. And that's where companies like DigitalOcean come in. They're making AI accessible to businesses of all sizes, providing the tools and support they need to integrate AI into their operations, even if they don't have a team of data scientists on staff.
So they're kind of like the bridge between this incredible technology and the businesses that can benefit from it.
That's a great way to put it. They're making AI less intimidating and more attainable.
Now, you raised a really interesting question earlier about how DigitalOcean might need to evolve to meet the increasingly sophisticated needs of future SMBs. I mean, as AI gets more and more advanced, surely those businesses are going to need more specialized tools and services, right?
That's a really important point. As AI continues to evolve, DigitalOcean is going to have to keep pace. One way they could do that is by offering more specialized AI tools and services that are tailored to specific industries.
So instead of just offering a general-purpose AI platform, they could offer solutions specifically designed for healthcare, retail, manufacturing, and so on. Almost like having an AI expert on call for each industry.
Precisely. That would allow them to cater to the unique needs of different businesses and help them leverage AI in a way that's most relevant to their operations.
That makes a lot of sense. It's like having a toolbox with all the right tools for the job, instead of just a hammer and a screwdriver. And I imagine education and training will become even more important as AI gets more complex.
You're absolutely right. Helping SMBs understand how to effectively use AI, how to identify opportunities, and how to avoid potential pitfalls will be crucial. DigitalOcean could play a big role in providing that education and support.
So they're not just selling a product, they're becoming a partner in helping these businesses succeed in an AI-driven world.
Exactly. And that's a really valuable proposition.
This has been a fascinating deep dive so far. We've gone from looking at a single AI growth stock to exploring the broader implications of AI on the future of business. And I have to say, I'm really starting to see the potential here.
It's always exciting to see how these cutting-edge technologies can transform industries and create new opportunities.
But before we wrap up, I want to touch on one more thing that really piqued my interest, this concept of fractional GPU capacity. I'm wondering, as AI continues to evolve, how will this technology develop and what new possibilities will it unlock for businesses, especially smaller ones?
That's a great question. And it leads us perfectly into the final part of our deep dive. We'll discuss the future of AI, the potential impact on businesses of all sizes, and what role DigitalOcean might play in this exciting new world.
All right, so we covered a lot of ground with the DigitalOcean, their approach to AI, their focus on those SMBs and their potential for growth. But let's step back for a second and look at the bigger picture here. AI is changing so fast. What does that really mean for like the average business owner? Someone who maybe isn't a tech expert but knows they need to like keep up?
That's the question on everyone's mind. And the truth is, AI is going to touch pretty much every industry in some way. It's not about jobs disappearing. It's more about changing how we work, what we can achieve.
So it's not this robots taking over scenario, but more like AI becoming another tool in the toolbox.
Exactly. Think about automating tasks, analyzing data in ways that humans just can't, creating really personalized customer experiences, even inventing whole new products or services. AI can do that.
Okay, I see the possibilities, but it's still a lot to take in. How does a small business owner with limited resources even start to make sense of all this? It feels kind of overwhelming.
And that's where a company like DigitalOcean becomes interesting. They're making these AI tools something that a business of any size can use. You don't need a team of data scientists on the payroll to get started.
So they're kind of leveling the playing field, making it so you don't have to be a tech giant to benefit from AI.
Yes. And that's crucial because AI is only going to get more powerful. Which brings us back to that question I raised earlier. How does DigitalOcean's approach need to evolve to keep up with the needs of SMBs as their use of AI gets more sophisticated?
Right, because if a small business is using AI for like basic stuff now, in a few years they'll likely need more advanced tools.
Right.
What could DigitalOcean do to stay ahead of the curve?
One key area is specialization. Right now they have a pretty general AI platform. But imagine if they offered industry-specific AI solutions, like AI tools specifically for healthcare or retail manufacturing, you name it.
So instead of one size fits all, it's more like having a custom-tailored AI solution. That would be a huge help for businesses trying to figure out how AI applies to their specific needs.
Exactly. It removes the guesswork and makes AI adoption much smoother.
Then I bet the educational side becomes even more important as those AI tools get more complex. DigitalOcean could really step up and become a resource for businesses trying to learn the ropes.
Absolutely. Think workshops, tutorials, even personalized consulting. If they can help businesses understand how to use AI effectively, identify the right opportunities, that builds trust and loyalty. It becomes less about just selling a product and more about becoming a true partner.
Wow. This deep dive has really opened my eyes, you know. We started with one AI growth stock, and we ended up discussing the whole future of business in an AI-driven world.
It's always fascinating to see how those threads connect, how one company's strategy can reflect such a huge shift in the way we work and operate.
So for our listeners who are ready to keep exploring, what would you suggest they do besides, buying a ton of DigitalOcean stock?
While doing your own research on DigitalOcean is always a good idea. Look at their financials. Explore their platform. See if their approach makes sense for your investment strategy. But more broadly, don't shy away from learning about AI itself. There are tons of resources out there. Articles, videos, even online courses. The more you understand about AI, the better equipped you'll be to make smart decisions for your business.
Great advice. Who knows? Maybe our listeners will be the ones developing the next big AI breakthroughs, thanks to taking that first step of learning more.
The possibilities are truly endless. Thanks for joining us on the Deep Dive. We'll be back soon with another deep dive into the ideas shaping our world.